Hey traders, I thought I would do a video for the mega caps to just give us an idea as to what happened last week with these, with the weakness in the mega caps. For example, Apple fell off a cliff out of nowhere. My guess is something happened abroad, Japan bond market on Sunday night, like last Sunday, not this one, 2 Sundays ago. Don't know if it was part of the piggy bank. So if somebody gets in trouble, gets a margin call, they sell something they can, not necessarily what they want to sell. So maybe that was the case because it was an unusual drop in a relative weakness, which rarely happens for Apple. If that's the case, then the job this week would be to stabilize against the June lows. That is an extraordinary fact, that the market is not even below the October lows and Apple is at the June lows. It's a scary moment for Apple. So my statement on Apple, it needs to be above 135. Otherwise, it's at risk of coming down to like 119. That is not my forecast because it is still avoidable, but it is possible because they lost this, and this could become a problem, resistance, because it was harsh support for the October and November corrections. And then now resistance, question mark. In order to erase that question mark, you need to just pop up. That's simple as that on this one. Let's go to Google. Better scenario for Google because they had their freak out moment here where Apple is now having it. So the November drop in Google placed a better low. So if you force my arm, I would go along Google, not Apple at this point. Just from the charts perspective, they're both excellent companies. So Google needs to hold this, otherwise it comes down to 77 or 78, maybe even 75. Those scenarios, by the way, are not my scenarios, but they are there, and I have to recognize they're there. I should also recognize that rallies in Apple or Google from here, say to here, is going to face sellers. So as Google rallies into 95 or 92, it's going to find sellers. So if you force me to trade it long, I wouldn't buy anything, although you could make money on a rally faster than me. My long would be easier to happen, which would be a credit put spread, bull put spread, where I don't actually need a rally. So if I take one in this week in Google, I will share it. Let's go to Meta. So Meta is the one that concerns me the most fundamentally, because if they shrink again in sales, I think it would raise some eyebrows. Netflix is in the same boat for me, shrinking in the count of subscribers for Netflix. So here we have an interesting scenario: extremely harsh lower highs and sharp higher lows. Something's going to happen. So if they can get to 125, they can easily gain 15, 18 points. But that shouldn't be easy because of this box. A lot of sellers up here. So in theory, if the markets help it, above 125, Facebook, Meta can have a burst of $15, $18. So I wouldn't short it. I don't want to own calls or shares into the earnings just in case. I could take a credit put spread before the earnings. I could do that. Netflix, I wouldn't. I want to own puts into the earnings. I have a hunch. I don't have a theory. It's a gamble. Good potential here, higher lows, higher highs, and they closed the gap completely. So there's no way you can get me long Netflix up here, not at all. So I reserve. I'm cautious with Netflix. So then we have the beast, Tesla. A lot of people are upset with Tesla. Hopefully you paid attention for the last few weeks, maybe even month and a half. I put these purple lines. I raised the alarm saying that it could be in the 140s, and it sure did that and then some. This was my target, and it's at my target. The actual target of this, whatever that is, Head and Shoulders, is much lower. It doesn't have to go there. Again, something may have broke in there. I still wouldn't. I definitely wouldn't start shorting Tesla down here. And if I own stock or am I long, I don't add. I don't know anything new that I didn't before. If I'm looking to invest in Tesla for the long term, I would only do a partial investment. This is not advice. This is just me saying how I would act with that. So No reason to add. If somebody wants to get long via credit put spread, I get it as a trade, as long as one manages their risk. There's no information here that tells me I need to get long more if I'm already long. Like, what is that down here? Why not come back down to here and fix this? So this pre-pandemic rally was insane. It was like 150%. And then we dropped, recovered, and we took off. And we're giving most of it back. So abnormal price action on the way up, so it looks hideous on the way down as well. So be careful how you deal with Tesla, especially emotionally. Let's do Nvidia while we're here. Nvidia had its moment like Tesla up here, and we also forecasted the drop, which also came to fruition. And also up here it was like, what? You're crazy. No, well, it happened. Same with AMD. So Nvidia and AMD now have the opportunity, like the market, to snap out of their year-long descending channel. Also, they had a problem from Bitcoin and blockchain, not blockchain, supply chains, and all kinds of other issues. So same, head and shoulders, AMD played it out. So if I was an investor in Nvidia or AMD, I don't add, but if I wanted to get invested in them for the long term, I could initiate partial positions right now, not all in, because we really don't know what's coming down the pipe. Weird little gap here on the way up. Why do they do that? Why do they do that? So I think there are buyers in here, like the box says, and they're showing up, hopefully. We'll see how that pans out in the next few hours. Couple of days are important. Let's see how that happens. This rally here in November 10th just ruined a whole bunch of charts. It was an insanely stupid rally on our part. I think it was a CPI report. Completely insane. Markets have become like toddlers. They want their candy and they want it now, and they'll throw a fit if they don't get it. And when they're done with it, they want more candy. Anyway, so I'm not compelled to add to current position. That's the main thinking with all of these stocks. So AMD, same thing. And if they do rally like this one, I see sellers in here. So they might cover this gap here, get to 68, and then they're going to find sellers. So then they'll dip, and hopefully they'll hold this dip. And they can probably recover 69. But there's no reason to go to the moon right from here. They will follow markets. So everything I said about all of these stocks, they will follow markets on their own. Like if the index will move, they'll go in that direction as well, is what I meant. All right, so let's go to the beast, the other beast, Amazon. You can see how they're selling it incessantly. So a rally into 88 will find sellers, just like this, the line that just keeps lower highs. And hopefully they'll find a bottom. This is a company that is thriving, and when Amazon tells me that their sales are cut drastically, this is when I really worry about the actual metrics in the economy. So I read an article, a headline of an article. Actually, I did read the article about the data accuracy of the government data accuracy, specifically to labor. You've heard me say it a million times. I get upset when somebody quotes the data in the jobs market, and it's garbage data from the standpoint of the data is not good. It's unreliable. You can't build bridges with that data. You just can't. I'm a numbers guy, and you just can't. So for us to hang over, it's 0.3 and 6.2 and whatever, they're miles. Let's wait for the revisions and see what they come out. I think they have to revise it every year, and they'll go back and revise it. It's probably hundreds of thousands they were off by. So we'll see. In this case, Amazon is a better gauge on the health of the economy. So if Amazon sales start to drop drastically, then there's definitely a shrinking of spending. But I got to tell you, I went around and the stores were full. There were lines out the door and everything. So, and online, there are trucks going around the neighborhoods everywhere. So I don't see it. That doesn't mean it's not happening. But I'll reserve my judgment to see it actually hitting the P&Ls of companies like Amazon. So I do like this company. Unfortunately, there's no recent support. So you look left and you have to go all the way, what is that, 2018 maybe, 2019? Good grief. You see what I mean? So the machines don't find support. So it's hard for them to stabilize. they will need the market to stabilize for them to at least come back and get into 88 and 90. I think I'll do one more, which is Mr. Softy, as they call him, Microsoft. Just like Amazon, it's making lower highs. However, look, it has recent support. So the bulls have something to work with. And guess what? Yes, the November 10th, 11th spike. Like Amazon, if we do rally into 245, I think there'll be sellers. Look at these 3 candles right there. So be careful chasing rallies. What is that thing right there? So be careful 250. So there are sellers. So the job this week would be to stop, not lose this. Just like Apple, you can see it. You can see the head and shoulders building either here, neckline, or here. Either case, the target is down here. So that whole zone right here, I guess we should do this. Look, all contention zone. It's not old. It's very new. Equals resistance. And if you can't recover it, you're going to have to come down to here to get a better base from here. So be careful. If I do a credit put spread, I have to hide down here if I can. Anyway, those are my big thoughts, my top line thoughts on the big companies, which were a debacle last week.